Good morning, everyone, and welcome to the European crossover webinar. And it's going to be interesting to see how this week finishes out with some of these pairs. To me, one of the most curious pairs I'm going to be keeping an eye on will actually be the cable. Boy, what a fall this thing has taken since the UK election. As the saying goes, who would have thunk it that we'd be falling back here? Now, to me, the key is going to be if we're able to break lower down here to 2980. I won't jump ahead of the analysis, but I tell you what, if we slide below 2980 and we close below 2980, oh man, that is going to be one heck of a move. Other than that, I mean, although the pound looks a little bit better right now. Looking to our chart, we're still hugging near the lows, but we are off of it. But it's going to be interesting to see what we do. Kind of concerned here that we haven't popped even higher after testing the 130 level. And euro remains relatively quiet also. And peso still hugging near the lows. The dollar index was able to get above 38, but we still haven't pushed any higher here. So it almost feels like everything's a bit in flux as we come in towards I should say, at the end of the week. Of course, we do have highs again in equities, and we'll go on and take a quick overview there. These S&Ps pushed hard. Now they're not, I mean, yes, it's all-time highs, but you can look at how we sat here since Monday, just in this range here, which really, for the most part, encompassed basically an 8-handle range for the most part throughout these days. Then finally we pushed higher here. The NASDAQ has been pushing higher for the better part of half of the week higher. We are seeing the notes back under pressure. We did see a rally up here. I posted that chart in there. We had some resistance. You can see here, confluence of a resistance horizontal level here and the trend line, and that came in at 28.13 or 12 and a half, and that actually dead stopped the market, and we've been working lower and lower, lower since. And actually lower and lower means higher rates, which should be dollar supportive. So it's something to keep an eye on here. Crude oil, we've discussed that already a couple of times this week about being careful at the $61 area, and that we had broken out of that very, very tight range, and that to be wary. Now, one of the things we talked about was we said that we thought that the market could stay around the $61 because we said, hey, look, when it breaks above, it had already broken above, but some people are going to try and fade it. Okay. And so I thought that may keep the market in check through Friday. Now, when I say through Friday, I mean the early part of the day. Now, as we go towards the end of the day, that's where you got to really be careful, because once again, my thought was in that tight range that they're going to go with the move, and go with the move. I think they will, and I think we'll probably be higher next week. I'm not making any bets on this thing, but like I said, because of the tight range we've been in, and we finally broke above, is that they're going to just ride this and stay with it. And think of it this way: if you're playing for the long side, you're up and you're still up very well. I mean, if you're long, let's say, and I'm just not even being that difficult, just saying long from 59 or long from 60, you don't have any reason at this point to get out of those. Now, like I said, I think it can keep the market in check around this area. But as we go towards the end of the day, be careful. We can start to move higher. And I definitely wouldn't be home this short over a weekend. But anyway, that's where we stand here. Let's take a look here with the gold market. We did make a move up here yesterday. This actually coincided, and I even posted a chart there, is if you looked at this, at the gold market on a 2-hour chart, and you can see this move here, and you compared it to the the notes, you can see right here, these moves were practically identical. And I'm talking about, look, this move and here, you see that right here? So when we got there, and I noted here, I go, gold's just simply following what the notes are doing. And you can see here, look at this move right here. Almost a mirror move right there. You see that? See it? And then we ran into that resistance and we made up to 1485-ish, almost a 6, may have made it right at 6, but a little bit short of that. And since then we pulled back. Yeah, well, in conjunction with the pullback that we've seen here in the bonds. Well, I should say the notes, the 10-year notes. With that, we're going to move into and the news is very slight too. Hang on a moment. So at the bottom of the hour, we do have UK GDP, along with business inventories or business investments, I should say. That's going to be at the bottom of the hour. So we'll keep an eye on the sterling pairs. Italian producer prices at the top of this next hour. This is odd. Oh, okay. I was thinking it was another GDP for the UK. Then as we come into the States, we're going to have a final GDP, Q3 at 8:30 Eastern. And Canadian retail sales. And at 10 a.m. Eastern, we'll have personal income and spending, as well as University of Michigan final number. So at the bottom of the hour, as I mentioned, we'll have UK GDP. We did get current account, the Eurozone current account, and also we actually had Italian consumer confidence, which came in a little bit better here. So let's move this all the way. I was looking for that European, the early morning European view, but we don't have it. I thought I saw it, but it was a breaking view story. Let's go on and move right into FX, and I'll cover the news. And the news is slight, exactly. Bear with me. Okay, the pound haunted by Brexit woes and limps to weekly loss. Sterling was precariously poised as it headed for its worst week in more than 2 years on Friday, hobbled by familiar fears of chaotic British exit from the European Union, while the firm data helped the dollar arrest its recent slide. Overnight, the pound slipped below the 130 for the first time in a fortnight. It was last quoted at 130.22 as worries grow about whether a deal can be secured before the December 2020 hard deadline. Cable has given up all the gains, one after the Prime Minister Boris Johnson was reelected last week, and has slumped 2.3% against the dollar since Monday. It has fared even worse against the euro, headed for its largest weekly loss since July of 2017. The market was also a little bit naive in a way to think that a Tory election win was going to remove the fog of Brexit, said Ray Trill. There were obviously some longs and weak hands that got forced out. More than 3 years since Britain voted to exit the European Union in the 2016 referendum, Johnson's government will leave the political bloc at the end of January and has set December 2020 as a hard deadline to reach a trade agreement. Uncertainty over that prospect helped the safe haven Swiss franc to its highest in a month against the euro and its strongest against the dollar since August. Elsewhere, the greenback found broad support. Solid housing starts and firmer than expected manufacturing data this week helped to halt 2 weeks of declines against a basket of currencies. Nobody expects the Federal Reserve to move interest rates anywhere when it meets in January. The dollar last traded a whisker stronger on the Japanese yen at 9.31 and a tiny bit weaker against the euro at 11.16. The best performer of the last 24 hours has been the Australian dollar, which rallied half a percent, as strong jobs data prompted traders to pare back bets of an interest rate cut when the central bank meets in February. Expectations that the RBA will reduce interest rates fell from 60% to just under even. That's a notable change when you drop under 50%. Psychology changes a little bit, said Westpac Sean Callow. I can see why people are not quite convinced who is sticking with a forecast for a cut. The Aussie was last steady to near 1 week high of 68.83. New Zealand's dollar was stable, 66.07 in a week where weakness in milk prices was offset by another round of positive economic data. Chinese yuan held just on the strong side of the symbolic 7 per dollar as China's unveiling of new tariff exemptions on the U.S. chemical and oil product imports supported optimism about the Sino-U.S. trade détente. China kept its leading benchmark rate unchanged on Friday, but markets widely expect further market easing in 2020 to arrest an economic slowdown. So, let's see. And let me see if there's anything in the news. It just... let's see. Oh, this can have a bit of an impact. Let's take a look at this. Eurozone bond yield steady. Consumer confidence data expected. Germany's 10-year government bond yield held near a 6-month highs on Friday before the release of the Eurozone consumer confidence data, which we showed came out. Bond yields rose this week following the release of better than expected business confidence data and an interest rate cut by the Swedish central bank that ended negative yields, causing speculation about the ECB's policy next year, where the key interest rate is at a minus 0.5%. There's convincing single reason to this movement in yields. The most likely explanation is a mixture of uncertainty regarding the monetary policy outlook for next year, improving sentiment and profit taking of a strong year-to-date performance ahead of the year-end. Analysts also stressed that the thin year-end trading volumes meant it takes little to move the markets. Market sentiment saw a boost after U.S. Treasury Secretary Steve Mnuchin said on Thursday that the United States and China would sign phase one of their trade agreement in early January. Mnuchin said the documentation was completely finished and just undergoing a technical scrub, though Beijing so far dodged all details of the deal. Most of the 10-year bond yields were unchanged in early trade, with Germany's benchmark at minus 0.24% off Thursday's 6-month high at minus 21.2. The flash Eurozone consumer confidence reading is due at 1500 GMT. A minus 7 reading is expected by the Reuters poll, a marginal improvement on last month's figure. Follows Germany's IFO business survey on Wednesday, which beat expectations and implied growth of 0.2 in the fourth quarter for the Eurozone's largest economy. One thing that's a bit interesting here is we are seeing data beginning to improve. Here and yields move higher. It may strike a tone for where the euro begins the first part of the year. So let's go on and move into the analysis. Okay, so it says the euro finished today at the lows, and we're referencing Thursday, which we're not far away from it. Although the pair held above 111, the risk remains to the downside. Support is 1082, followed by 1050, and resistance is at 1155. So the risk is that we can still go in and slide down here to 1082, and certainly it's a possibility if we can go and get a bit of a foothold. Go all right there. You can see right here at 1082. We can still get that slide. We're only 15 and a half pips away from, taking some stops out at 111, and we're seeing the dollar that's correspondingly above 97.38. So let's go on and take a look. So we got 1082 here, and it's going to be 1155 for today's resistance. At least for now, we're still in a range. For now, we shall see how we close out today. But certainly, we can go in and hit these stops below 111 and see what kind of follow through we get. And you can see resistance. We need to get above that 1155 here to get us going. For me, this is a unique pair right here, which is cable, in the sense after all the work that we did and how this market took off. And now, I mean, holy smokes, if you close below 2980, that's going to be one heck of a reversal here. But let's get to the analysis. So cable continues to backslide from the UK election night. The pivot 2980 is in focus for Friday. A close below the pivot will send the pair sub 128 next week. Resistance is going to be 3129. So if we close below 2980, and you can see the significance of 2980. Look at this. This is beyond freaking huge. Okay? We close below 2980, and that quickly to lose that, we're going sub 128 on the test. There's no doubt about that. We'll go sub 128 next week because you'll see a ferocity of stops being hit. But let's see whether or not that takes place or not. We shall see. So, we're actually going to go and put, it's 2980 slash right here, 2953. On the upside, $30.76. Slash 3129. It still remains bullish, but I'll tell you what, it hangs in the balance. We shall see. Needs to hold that. Let's go and move into the Aussie. So Aussie saw a rebound post-employment report closing right at resistance of 68.85. Friday's resistance will be 69.14 with support at 68.48. So we did get that rebound. I thought, the employment report was going to come in weaker and we'd see some pressure, blah, 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 and so on. My focus was on the sterling odd, although, as I mentioned, I ended up missing that report, thinking that it came an hour later. But that being said, resistance is going to be here for the Aussie dollar at 69.14. That's clear as a bell. You can see that. And support will be 68.48. Moving to the Kiwi. Okay, Kiwi resumed to the upside swing, closing at new highs on Thursday. Friday's resistance will be 66.32 with support at 65.62. So you can see here that on Thursday, albeit in a rather tight range, nonetheless, we close at the best levels. Now we have pared back a bit, but resistance is going to be right there at 66.32. And support will be 65.62, keeping it pretty tight for today. And for the dollar CAD is holding steady above 131. I thought we would have gone sub 131, and not a big move, but I would have thought we'd have tested the 3097/3090. We even split the difference. Remember, I think we called it 3093. But anyway, dollar CAD is holding steady above 131, but risk remains for a slide to 3090, testing the daily trend line. Resistance will be 31.62. So we're still holding our own here. And we're going to move this down to the trend line 3090 right there. See if we can get past there or trigger those lows. We shall see. The dollar's in a situation where it can either squeeze those highs a little bit better, which it can, or if we do go in and pair back. And once again, it's interesting because, like I said, we can see the dollar CAD slide below 131. I don't think it's going to go too far. Or we can see the cable trigger a move below 130, as well as euro trigger a move below 111. So interesting to see how we play this day out. Let's go and move in now to the peso. Here's another one. Obviously on the weak side, because of where we are with equities, we just saw that, covered that a little bit. Let's go and move into the analysis on the peso. So the dollar peso remains close to the bottom, which is 1890. Friday has the potential for a new low, which would open a move to 1875. Upside resistance is 1902, so rather conservative on that upside. So we'll move this to 1902, and it's clearly bearish. Downside is actually going to be 1885. We actually been holding this area here. I mean, even as a bias chart support throughout the last 3 days, but you got to be a little bit realistic because if they do press it, then you're looking for 1885. That was a support area, but what we're looking for overall would be then a move to 1875, but it will be 1885 for today. So the dollar yen has pared back, sliding below the pivot of 927 before recovering. Resistance is going to be 952 with support at 908. Now, one of the things we talked about, we talked to this ad nauseum, but we'll just take a real quick recap because we're, it's the end of the week. Here we are at all-time highs in the SPOOs, all-time highs in the NAS. Dollar yen should be easily at 113, if not even higher. And it's simply not. The only thing that pushed this dollar yen above 927 and held it, more importantly than just pushing it above, was the increase in interest rates, U.S. interest rates. But we saw and as we pointed out yesterday, or we pointed out earlier, that we saw the move in yields, i.e. inverse relationship with the prices. We saw the 10-year notes move higher, came right into that resistance, and the yen came off. The yen came off and a decent amount, going all the way down to, I think it was 919, although I thought potentially we might have even seen it gone down to 908, but it didn't. That being said, we have recovered a little bit as the prices for notes came back down, sending yields back up. But resistance today is going to be 952. Still remains bullish. And support will be 908. The dollar index is pushing higher into the end of the week. Resistance is 97.68. Support is 97.20. Now that's succinct. But the key thing was, and we discussed that as we started at the beginning of the week, resistance was going to be 97.38. One of the key things we were looking at, and this is what you have to be a little bit worried about when you're looking at some of these other pairs, i.e. the euro, cable. Cable is basically in its own, to me, in its own not spectrum, but its own mold in a sense. It's a bigger thing. It can be impacted by the dollar, certainly, but to me, it's all about whether we come back to attack that pivot and do we get a foothold below 130. But anyway, that being said, is one of the things that we're looking at the beginning of the week was as we tried to move back higher, and we did initially. I said, hey, look, it's still bearish because we're below the trend line. Well, we got above the trend line. We actually held above the trend line yesterday. So we got above it on Wednesday, held above it on Thursday. And not only did we get above the trend line, we also got above 97.38. So do we push higher here? Now, I don't think we're going to take off from here to the moon, or not even the moon, just a little bit higher, which could pressure this. But it can be enough where we see the euro come in and hit those stops at 111. So resistance is going to be 97.68. And support's going to be 97.20. Oh, we got UK data. Hang on. Okay, we're at 30.38. Hang on. Okay, GDP came in up 0.4. They were expecting up 0.3, so better than expected. Year over year was 1.1, a little better than 1%. Business investment flat. Current account a bit weaker, but definitely an improvement here in GDP right here, coming in at 0.4 tenths of a percent. Not a real big movement here in cable, but certainly we picked up off of the lows. So as we mentioned, resistance is going to be 97.68 with support could be at 97.20. You know, it certainly did look like the dollar index was going to break down here, and boy, I know a lot of people, a lot of people, been writing the epitaph for the dollar, especially on this move. So let's see what happens. Let's see what happens. It's going to be interesting. They can push them a little bit higher. Let's go move into the cross rates now. Well, the Kiwi yen is still holding up very well up here, and this has been nothing short of a stellar 3-week run. And we're just, consolidating here. Certainly looks like it has the potential to make another move higher here. We shall see. But there's not going to be any changes here, obviously, because we're consolidating. And so upside is going to be 72.37, downside 71.87. Very, very tight range, but like I said, no changes here. Let's go and move in now to the euro yen. Well, this one's a bit interesting because potentially we can see the euro weaken. The odd thing is, although it's coming towards the end of the year, no one's making any big bets. But, we're starting to see better Eurozone indicators, economic indicators. And we are seeing Eurozone yields as a direct result of those indicators move higher, although U.S. yields are moving higher also. Once again, thinking we could maybe start to see the euro. We could see the euros at the beginning of the year start to make a move higher. We shall see how that plays out. In the meantime, though, certainly we've pulled back here. Resistance is now, or so I should say, support's going to be right there, 21.34. So we'll do that here. And resistance, 22.08. Let's go and move into the euro. Well, this market is trading rather quietly, and I didn't want to, believe it, but it certainly looks like potentially we can slide back here to 60.95, and that's going to have to be the buy chart support here, 60.95. Upside, boy, has this just been an up and down affair. Upside's going to be right there. Right there. 61.96. Euro Kiwi continues to hug the lows here. Until we break, we haven't broken, but wow. We expected a bounce here, but I would have thought, okay, we consolidate and maybe try and work a little bit higher. We're still hugging the lows, so it's going to be 68.06 on the downside. Certainly, we can see the potential for the euro to trigger stops, apparently across the board. So we may see that come to fruition today. I'm talking about the euro dollar, that we can go sub 111. On the upside, resistance. We're just going to stick with these ranges. It's a little bit of a stretch here. It's hard to believe that it'll make it up here, but that will be resistance, which is going to be 69.42. Let's now go into the Aussie. That's 75.62. Got it right there. And on the downside, right there, 75 even. And let's go over into the guppy. Oh my goodness. So we've stabilized a bit here. Resistance is going to be right there at 43.36. So you can see that coming right across here. And support, well, you can see it right here, 41.82, clears the bell. And let's go into the sterling odd. Those two charts almost looked identical. Support's going to be right there. 88.43. Where's the resistance coming in? Right there. 89.76. See right there. And there we have it. Let's see how we finish the day out. You have to keep an eye on the euro. With the way that the dollar index is trading, we're going to get back to that. We are sliding back a bit here. You can see there's some resistance here at this 46 area here. But that, once again, keep an eye on this euro dollar. We can certainly slide below this 111 here. And although cable's doing a bit better on the backdrop of the GDP data, but it'll be interesting to see if we challenge that 130 again. But there you have it. We'll see how we finish the week, and next week's probably going to be completely dead. But thanks for joining us here on the European Crossover webinar. We'll see you in the chat room.